Uh, okay, we are live. Hello and welcome to Legacy Money, the show that helps you live more, give more, and leave more. Thank you for joining us today, and thank you. I have a special guest today, Mr. Barry James Dyke. He's in New Hampshire, up
Yeah,
there where.
raining, cold New Hampshire. Yeah, today it's but yeah, we're up here in the beautiful seacoast, but it's cold today. Yeah.
Awesome, awesome. Well, we've got some great questions, but just since you are in New Hampshire, how's the news around there after the caucus? Is there
Well,
is there
the
many people
Donald,
talking?
the Donald won. So it's just it's a pretty busy place around here. I'm not surprised. It looks like Mr. Trump is he's moving forward. Yeah, so it's just it's crazy. I don't pay too much attention to other than voting, but yeah. So this is it's one of the first primaries. So so it looks like it'll be Biden and Trump again.
Yeah, looks like it. Looks like it. We'll get into maybe a little bit about how that might affect the economy and things, but Barry, if you don't know, is the author of the best-selling book, The Pirates of Manhattan, and this is actually how I met him many years ago at an infinite banking think tank in Birmingham, Alabama. So that was probably around 2007, 2008,
Yeah,
just before the last debacle. Do you remember that, Barry?
yeah. Actually, yeah. The book's been out 17 years. It still sells well, Barry. Actually, around the world, I've sold it in 23 countries, believe it or not. And yeah, it still sells well. But that was God bless Nelson, because he was really kind of helped me get the thing off the ground. And so it still sells well to this day.
Yeah, believe it or not, I mean, I have people that tell me all the time that they've read the book, and I recommend it. And I applaud you. I tell you, that was a very eye-opening event for me. Just hearing you speak, I learned a lot. About things like BOLI, bank-owned life insurance, and just about some of the corruption that's going on Wall Street. So we're not here to entertain you. We're here to educate. So I want you, maybe Barry, to tell us a little bit about money and banking and your backstory. How did you get involved in the financial services industry?
Well, that was really, yeah, it's a good question, Barry. I hate to say it, but roughly 40 years ago, but believe it or not, I was in high tech. I used to sell, and I was a pretty entrepreneurial. I owned part of a optical company who actually sold the parts to missiles, believe it or not. Sidewinder missiles was the most expensive parts in missiles, but that I own 5% ownership of that company. That's another story. But I've always been somewhat of an entrepreneur in my life. When I was 14 years old, I had a lawn mowing business, and I had a pretty good little business because I just hustled. And so when I got out of college, I went to work for RCA, and I sold international communication systems. Then I was in high tech, and this is in the early 80s. At the time, it was a crazy time in the economy, like now. I had closed some pretty big cases and in high tech, but I kind of got bamboozled by one company I was with, so I really wanted to work for myself. So at that time, I said, well, what can I get into a business with just minimal capital? And so that's how I got into insurance business. I never thought I would get into it. My father was in the business. He had since passed, but so I got into the business, and I did very well. I was rookie of the year for Prudential, like 40 years ago, and then I started a pension business and sold that to New England Life in 1989. Set up a third-party administrator in 1990, and sold that in 96. And set up a registered investment advisor in 2000, and then I came up with this. And then I went through a divorce. I had to reinvent myself, and I've been in this. I don't know how long you've been in this business, Barry, but I realized a lot of these financial products sold by Wall Street, they don't work. They'll never work, but they're still dumped on the American consumer. So, just kind of give you an interesting fact. You know how many? When I entered into the business around 2002, actually, maybe a little before that. But anyway, there's roughly 30,000 products, so financial products, available in the United States, packaged products. You know how many there are today, Barry?
How many?
750,000.
Wow. That's
Now,
amazing.
Yeah. So it's just, everyone has an ETF or a mutual fund, whatever. There's more ETFs and mutual funds than listed stocks. There's only about 3,000 or 4,000 listed on each exchanges. So it's been the hyper financialization of the economy.
Absolutely. Yeah.
It's hyper financialization, and the whole thing is that people have drifted off course and the fundamentals, and so what we see is just all this crazy stuff. And I'll be coming out with a new book. It's already, actually, the manuscript's already done. It's going to be called buybacks, stock buybacks, cryptocurrencies, unicorns, and SPACs, which is already done. But this whole debacle we see with cryptocurrencies and these SPACs, which is an acronym for Special Purpose Acquisition Company.
Yeah.
It's just been a total. I didn't think it'd get worse than 2008, Barry, but it has gotten much worse.
Yeah. Well, we'll get further into some of the specifics, but I'm curious, how did you come across Nelson Nash? And because again, it was a real eye opener for me hearing you talk about some of these things, and but how did you first become introduced to becoming your own banker in Nelson Nash? What brought you to the think tank?
Yeah, well, what it was is that I was at a company incentive trip, whatever. I think a meeting like in January, but anyway, and I was going through a tough time. I'd gone through a recent divorce and separation, and I was looking to reinvent myself, and I ran into a guy named Tim Cooper. I don't know if you ever knew Tim, but he's in Ohio. And I had known that the banks, and this is still true today, Barry, the banks had purchased a lot of life insurance, but no one would talk to me about it. So I call the banks, they wouldn't talk to me. I talked to the brokers who I knew sold it, they wouldn't talk to me. And so in any event, so I had to reinvent myself. But then when I saw Nelson's book by Tim, he gave me a copy. Remember those old green and white ones, Barry? Remember those old green and white books? So he said, become your own banker. And, I intuitively, I took to it because I realized that I've been blessed, Barry. I've sold stocks and bonds and mutual funds and limited partnerships and the whole thing. And I realized a lot of the stuff is just crap. And, and I'm a capitalist, don't get me wrong. And so they don't work, and there's no guarantee. So I did know that annuities and life products were actually worked. Yeah. So anyway, so I had to reinvent myself, and I was in a tough time in my life. And but Nelson he's just a wonderful man, as you know. He ended up becoming a mentor and a good friend.
Yeah, absolutely.
And and I started digging on this stuff, and I had to reinvent myself. And I started doing the research because I always wanted to write a book. I always wanted to do that. And so then I think, I don't know when it was, but I shared this with Nelson. He says, you have to finish this work.
Yeah.
And he says, you have to,
Yeah, I remember, after you spoke, Nelson also, he brought up something that you definitely need life insurance because you need to be protected after spilling the beans on all the corruption on Wall Street. So how did you get really into investigating them and, all the research that had to go into your book? I mean, how did you get into that?
It's kind of corny. I tell people, look, I'm a Christian. The most important thing in my life is Jesus. But I also look. As a kid, I used to take apart toys and bear and see how these things worked. Yeah. And so I started taking the mutual funds to see how they didn't work. Then I started figuring out how life insurance did work, and so I said, there's something to this. And then I started. And this is at the time, Barry, when if you want to get an article from like the Wall Street Journal or something like that, you had to put your MasterCard in. They would charge you $5 an article. Back in the day. So anyway, so I started looking at it, and again, I ran into closed doors all over the place. All right. And, but I, due to my faith, whatever, I just kept going like a dog, and I started to pick up some stuff. And then I befriended this African-American woman down in the FDIC. She was, I forget, I never met her. Okay. But she was so sweet, and I'd send her flowers and candy down the whole thing. And she showed me how to download a lot of the stuff in the FDIC.
Mm.
And so that's when I knew I was onto something. It was one of those things that like, aha. And so, and then at the time you could, I started, researching how much like guys like Forbes bought insurance and Elvis and all these other people. So that's, so it was a lot of shovel and spade work. And so I just put the book together because I realized it did work. And I had, I had a few claims by that time, and I realized that life insurance was one of the only things that work in annuities. So, but it's been even to this day, Barry, it's still kind of a slog, and but it's all true, and it's my story, and I'm sticking to it, and I'm testifying in court and this stuff, but the media will not tell people. So, thank you for your efforts to reach out, because people don't know what's going on.
Yeah, absolutely. And, you bringing up the FDIC, I was trying to find the quote as you were talking, but there's a quote in your book from the former chairman of the FDIC. I've used it before in my blogs and whatnot, but basically it says, the good news is the FDIC stands behind you and your, deposits in the bank. And then it goes on to say, or he does, the bad news is you stand behind the FDIC and the government, right? So basically, we as taxpayers are really the backup, right?
Yeah. And the fact of the matter is, even the FDIC today, there is virtually no reserves, and it's because they create money out of thin air, as you know, and everyone should read The Creature from Jekyll Island and all that stuff. But so
right up there,
you get the creature. So, but anyway, so then I started so I was a kid, I wanted to understand the mechanics of things.
Yeah.
So then I understand how life insurance had to be fully reserved, and how they couldn't create money out of thin air. And then I figured out why is Wells Fargo, why is JP Morgan, why is Citibank, why is Bank of America, okay? Why are they buying all life insurance? Because they were doing it for a very lot, because of the tax benefits, the guaranteed increase in cash value went to their income statement, which proves, believe it or not, proves their share price for Wall Street and their earnings calls. We know that everyone dies eventually, and the money comes into the income tax free. And it's also just a beautiful vehicle just to fund executive compensation. So I started researching this, and then I was able to get some books and some people to help me, but not much. But it was really this African American woman down in the FDIC. She really helped me, and I'll be forever grateful for it. So that, but then you could actually get into this stuff rather easily, Barry. But now even a nerd like me, they put all these hurdles into figuring this stuff out.
Yeah, it's amazing. You can go to the Federal Reserve website or the FDIC, and most of this that we're speaking of is all listed there. But just kind of shifting gears a little bit, and that BOLI, Bank on Life Insurance list that's in your book, that's amazing. It just really, it's pages. I keep it bookmarked in here, but it's just pages of all of the banks that own life insurance. So really appreciate you sharing that and opening my eyes up to it. But kind of shifting gears here to the economy and maybe the risk for consumers out there. Of course, the stock markets are at all-time highs right now. It's just amazing. How do you explain that? And what do you think are some of the risk for consumers out there?
There's tons of risk. That's the whole thing. The whole thing is the 401k is just a casino on wheels. It's just it's stuff with target date funds. People go to the BarryJamesDyke.com, they can get the book, which I wrote in target date funds on the highway to serfdom. So the fact of the matter is that a lot of this stuff just doesn't work, and so I wrote the book in 2012. That was the second book, Highway to Serfdom. Play on Hayek. But I wrote that, and I realized it didn't work. But because of the asset management industrial complex, I'll call it, that target date funds were stuffed into the 401ks as the qualified QDIA, which is an acronym for Qualified Default Investment Account. So all this money is going into all these mutual funds, which no one really understands. I still can't understand a lot of these things to this day. And the thing is, as long as people take these qualified default target date funds, the employer can't get sued, and the asset manager can't get sued. But what about the saver? There's no guarantee for them. So it's protecting the employer and it's protecting the asset manager, but there's no protection for the retail saver.
Sure. And I remember when you brought that up about the target dated funds and the ETFs and whatnot. And of course, what do we have that just passed in the last 2 weeks is now a Bitcoin ETF. So what are your thoughts on that? And how is that the Fed? Do you think the SEC, are they trying to box in Bitcoin now? I mean, what's going on with that?
No, that's the asset management industrial complex, Barry. Okay, so there's actually, and this will be in the I'm releasing 2 books. This will probably be in the second book, but Pew Research, them, they're out of the big nonpartisan research organization out of Pennsylvania, and they did a survey, Barry, and I couldn't make this stuff up. People don't believe me, Google it, okay? Because you know me, I don't say anything which I can't verify. Right. But 75% of the American population really doesn't trust cryptocurrencies. Okay, so Pew essentially did, and the debacle which we saw with the collapse of FTX and Sam Bankman-Fried, where I don't know, 10 billion at least have been lost. I mean, and there's been numerous bankruptcies. There was just another bankruptcy, that guy Quaidon, whatever it was, this bankruptcy this week. But my point is that they've been pushed on the American public because the asset management industrial complex was another product to push onto the American public, and the SEC once again caved to the asset management business, and BlackRock and Fidelity and these other Invesco and a bunch of other ones. There's about 10, 11 of these ETFs approved. So the fact of the matter is, I guess maybe there's going to be some blockchain is a valid concept, but the idea about cryptos is lightning in a bottle, Barry. I mean, it's almost like another tulip mania, which we saw in Holland. So but in Bitcoin, Bitcoin's up and the whole thing. I think it was like 47,000 last week. I think it's something like 39,000 today. So it's very, very volatile.
Yeah, very volatile. And I've been doing a little extracurricular reading myself, and a lot of people think that maybe the fact that BlackRock and Fidelity, being the first, the largest and all, taking that, it's just another way to manipulate the market, kind of like JP Morgan did with silver and whatnot. So a lot of people are along that, and I think that's after that it went up tremendously and then went down tremendously, but a lot of people are betting on it, so the risk factor is there. But it's interesting, and of course real estate has been big. I've invested in real estate for a little over 25 years. I kind of got out of it a lot after the debacle, but it seems like half the people I talk to now about infinite banking are investing or want to invest in real estate. So do you see any risk for real estate investors out there? I heard yesterday on the news about a $700 billion default coming soon with these adjustable rate variable commercial mortgages. What do you think?
We're starting to see unfortunately a lot of these cracks are already happening, Barry. Matter of fact, Blackstone, who is the granddaddy of all these, Blackstone, not BlackRock, although they're interconnected. We're actually spun out of Blackstone, but
Rocks and stones.
So they just defaulted on a property they bought in 2014 for like 600 million, and they just send a jingle mail, they essentially sent the keys back and they defaulted on the mortgage. So here's one of the biggest institutional real estate investors in the world, who pushes this stuff on the public and have done a very good job marketing this. But they just defaulted on one of these properties. And then last year, they also defaulted on another major set of properties in Sweden's called Sponda, SPONDA. So the whole thing is that, I'm not against real estate. I mean, if you know what you're doing, you get the depreciation allowance, the interest deduction, you're getting capital gains treatment, you can get rents. It's really, I can't do it personally, but for certain people, it is good, but you really have to kind of watch it all the time. I don't know how, if people do that, I think but it's really, it's a difficult one. And then it's,
Yeah. Well, and you touched on a good point there. I think a lot of people, they discount the amount of maintenance or effort that they have to put into it, whether they get a management company or not. Ultimately, what they tell me is they want passive income. And so there is a lot of activity. But the risks are mainly what I'm concerned about, going forward is, what could happen, especially in the near future. Speaking of which, we've been hearing about a soft landing, and now they've kind of shifted gears, right? The market's up. So, I mean, what are your thoughts on inflation and interest rates? Do you think the Fed will lower rates in 2024? Well,
they're beholden to Wall Street. So, I mean, and all this stuff, soft landing, it's, it's BS. But anyone, I don't know if you have a family, Barry, anyone goes to the grocery store they say there's no inflation. If you go to the floor, if you go to the store, for the grocery store, and you spend $200, you got nothing. You're lucky if you got a couple of steaks. So the whole thing is we do have massive inflation because of the money printing, and it all goes back to the Fed. So so we do have a lot of inflation. I mean, I don't know how it's in Mississippi, but the median price of a home here in the seacoast of New Hampshire, Barry, is $905,000. I mean, it's stupid.
Yeah, it's pretty crazy. Right here in my little small town, if you get a property downtown from the 50s, it's in the 600,000, which is astronomical, compared to history. But yeah, inflation is affecting everybody, I believe. So, it seems the market has already kind of priced that in. They feel like rates are going to drop, but what do you think is going to happen if they don't lower rates? Do you think, what's the outlook from your perspective?
I don't know. I still do planning, Barry, and as I know you do, and I think that really the key thing for your listeners and out there is really to manage your debt. And I think I'm not against mortgages or things like that. Things which produce income or a home. But the thing is, you have to really manage your debt because that's how they enslave people with debt.
Yeah.
So it's gonna be challenging because I think you really can't. I don't know what interest rates now are 7.5%, something like that. But so I think really the key really for people, and I know you can help them, is really to manage the debt and to have patient capital. And when you understand it, there's a huge difference between savings and investing. But of course, Wall Street wants you to think it's all the same, and it's not. Okay. Yes. But when you have saved patient capital in something in a savings account or a life insurance or whatever, okay, you can really take advantage of things.
Sure.
And the whole thing is that when you understand it, it's one of the best products you can own. And I always tell people, which is in the first book, the Walt Disney story.
Great story.
In 1954, Walt Disney's quite the story. I don't know if you've ever seen his story on Netflix or whatever. There's a series on him, but around 1954, he wanted to create a clean theme park, and everyone thought he was crazy.
For kids. Yeah, for kids.
He wanted to have family. He didn't want to have honky tonk and all that stuff. And he didn't want a nice clean family place. But everyone thought he was nuts.
Yeah.
Okay. And the thing is that, as you know, So his brother wouldn't help him. His bankers wouldn't help him. So actually, he gets some of his own employees, and they pitched in with him. He sold his home, his like winter home in Palm Springs, California. But then he secured like $100,000-$200,000 loan at that time. When 54, that's a lot of money out of his life insurance, and that's what it came up to the seed capital to create Disneyland in Anaheim, California. So all we need is a Mickey Mouse plan. Hang on, let me put this down. Sorry about that. So all we really need is a Mickey Mouse plan. So anyway, so he used 100,000-200,000. This is all true. Matter of fact, if you go visit Disneyland, you will find that they actually talk about how he started Disneyland with a life insurance loan. And I'm saying, man, so anyone people need is a Mickey Mouse plan.
Yeah, absolutely.
So that's just an example, and and I've been in the business long enough too, Barry. I don't know when you started the business, but I was
20 years.
How many years?
20 years this year.
Yeah, so I've been in roughly 40, but I remember in the 1980s, Barry, interest rates were very, very high, and you couldn't borrow money. It was expensive. Prime rate was like 13, 14, 15%. It was huge.
Yeah. My first car, 34%.
Holy moly. Okay.
Yeah.
So at the time I inherited a client, and I really understood the power of life insurance. It was this dealership in Gloucester, Massachusetts, in a beautiful area. And these folks wanted to buy the dealership next door. And, and this is the time of 13, 14, 15% money, for commercial loans. All right.
Yeah.
So these people, and I inherited these things, these policies, but these people had a significant portfolio of policies. I'll never forget that they used the life insurance loans, about 200,000 at the time. They were borrowing money at 4 or 5% from the life insurance company, and they used that capital to acquire the dealership next to them. So I saw the power of it at the time, but I said, but no one's really written about this. So I knew I had these things in my own experience, if you will. And then you start learning about things like Walt Disney and everyone else, and the Magic Chef and all these other people who use it as an instrument. So it's a workhorse of a product.
Yeah, absolutely. Just having access to the capital is huge, and something that I think most people overlook, because they think of retirement and their retirement accounts, but they can't access that capital, right? And like you mentioned, if you want to scale your business, if you want to grow like Walt Disney did, or many other businesses that have used life insurance, this is a place where you can have your own private system or reserve that you can utilize to do whatever you want to do. But kind of shifting gears a little bit, but you brought up debt a little earlier, and I just checked the numbers. Consumer credit card debt now is $1.3 trillion. So that is literally doubled in the past couple of years. So tell me, what's going to happen? Interest rates now for a credit card are upwards of 30%. It's just insane. What could happen to people that have credit card debt like that, and what can they do?
Well, they're not much. But this is the thing, Barry. Well, we have to really help educate people. I wrote about that in my second book, Highway to Serfdom. This is, and the whole thing is all true. Is that it was called a 2005 Consumer Protection Bankruptcy Abuse Law. Okay. Mm-hmm. And the fact of the matter is, the steward behind this was Joe Biden. Okay, this is fact. It's in my book. I have it. I got the Senate record. He was essentially his biggest client at the time, or his biggest benefactor was the NB&A Bank, which is based out of Delaware, and they essentially pushed this thing through so you can't discharge credit card debt or college loans. It was like a 1-2 punch. So banks didn't want to have defaults on college loans, and they didn't want to have defaults on credit cards. So in 2005, they essentially changed usury credit cards. Okay, when usury, if you from a moral perspective, they're buying money, they're getting money out for nothing, and then they're charging 30, 40, 50%. So this is why it makes so much important, Barry, that people do have their own capital base, because I've been there, done that, and went through a divorce and all that stuff. I had to live off a credit card. It's no fun. It took me years to get out of this stuff. So, but the whole thing is that this country's controlled by lobbyists, and there's over 12,000 lobbyists. Can you believe there's over 12,000 lobbyists in this country? And so they push things like credit cards, and now there's this new one, which it's another form of usury. Is have you seen these BNPL loans?
Profit?
No, it's called buy now, pay later.
Oh yeah, absolutely, yeah.
So they're pushing this. There's a big company, a firm that does this stuff, and they're pushing this in the UK and Europe as well. So they're essentially they're and this is why everyone wants to get in finance, because they can make all this money off of money that they don't they get for free. So I think, but for you and I, and for most 98% of the consumers out there, they really have to have a safe place to pool capital, and you can't beat it from And then I don't know. Now you're in Mississippi. I don't know how much creditor protection is in Mississippi.
We have it with life insurance for sure, and that's a good point. I've heard you tell the story of Enron, but I think you have a story too. You're familiar with MCI WorldCom, correct?
That is yes. Matter of fact, believe it or not, an old friend of mine was actually, he sold his business to them. I haven't heard this one on MCI WorldCom. Okay. That crazy guy out of Florida bought all the
Bernie Evers. It was actually here in Mississippi. So that was some of the first stock that I bought right out of college after I'd saved some money. And you might remember us talking. I worked in college for another company that's kind of gone south that you brought up in your books as well, Thomas Nelson Publishers, which is somewhat of a sad story. But these companies seem to get bought out by these large funds and whatnot. Elaborate on that a little bit. What's going on?
Well, this is why stay tuned, Barry. And I'll let you know when the next. This has been the tragedy of leverage finance since 2008. Is just gone through the roof. And I think there's something like $12 trillion in essentially buying companies with boatloads of debt. Now, the thing is that people, and this is how Thomas Nelson went through. I always thought it was really funny that Thomas Nelson, that's right, you sold Bibles in colleges, am I correct?
Yeah.
I said, boy, yes, you got to be a good salesman. Going door to door selling that. That's tough stuff.
Well, it was hard work. Yeah, absolutely. It was the best thing I ever did, though.
Yeah, so it gave you the discipline, but what shocked me, this is in the second book, Pirates 2, is that Thomas Nelson, who's a Bible company, was bought and sold by at least one or two.
HarperCollins. Murdoch.
Well, it ended up being Murdoch's, but Kohlberg Company, a Jewish private equity firm out of New York, ends up buying one of the world's largest Bible publishers. Yeah. And now Murdoch owns it now, but in News Corp. But yeah, but there's all done a leverage buyout. The thing is, people don't realize is that this is why I will be having this other book come out, is that all these bankruptcies and all this under leverage buyouts, because anytime we put a lot of debt, Barry, on an individual or a family or a small business, it causes stress, and too much debt, it can cause either default or bankruptcy. And so people, I had some people don't understand about leverage buyouts, but they understand who companies were, like Chrysler Motors or Toys R Us or iHeartRadio or Avaya or there's dozens. There's actually over 700 of them that companies have gone bankrupt under leverage finance. But this is kind of now they want to stuff this stuff into your 401k.
Yeah. It's pretty amazing. And just hearing you speak about it, it almost makes my blood boil. But what, for the average consumer and for somebody that's looking to do, get started with infinite banking, you talked about risk and safety there. We need a balance, right? We need a balance between that. But, there seems, you and I have been doing it a long time, but, it seems like a lot of the new people in the industry are out there, basically with these shiny object plans that utilize something, for instance, IUL. I hear all these people say they're doing infinite banking with Index Universal Life. Kind of what's your thoughts on that? And so all of the talk gets around, well, how do you build a policy? And of course they can show all these high numbers, just like they did in the 80s and 90s with UL, but can you speak to that a little bit? I mean, what should somebody know just getting started? What's important to know about infinite banking if you wanted to get started?
Well, the whole thing is, I think we have to be good steward, Barry, of other people's money because this is serious stuff. This is really, really serious stuff. We're trying to have people accumulate capital and also look out for the families. I'm an old insurance guy, and I always will be to the day I die.
Right.
So, but the thing is that our job, Barry, is also to remove risk. Okay. Yes. Now, what I've noticed since I've been in the business is 83 now, whatever. So it's 40, 41 years. But what I've noticed is a trend of all the inherent economic risk, Barry, have been essentially taken away from an employer plan and then being gradually shifted onto the employer or the individual saver. So the thing is, I'm not against IUL, whatever, but it doesn't work. And then when we have, and I'll tell you a true story about universal life, and then I'll in the next book, Pirates Day, I talk about the collapse of executive life, which is sold universal life, when it ended up costing. It took 30 years for the bloody company to finally set up the claim. So this is a true story, okay? And it's awful. But the thing is, this is they say, oh, we're unbundling the services. So the whole thing is Wall Street got involved, junk bonds, and all this stuff. But my point is that with the whole life, whatever, you're having guarantees and you fix mortality charges, guaranteed amounts of guaranteed growth and so forth. So during this whole 0% interest rate period for 14 years, which we had, whole life looked pretty darn good.
Yeah, absolutely. Yeah, my policies have grown all through all of the debacles. It's amazing. So really love that. But we're coming up on time here, so I want you've touched on it. You've had a few books, and of course you're about to come out with a new one. So tell us a little bit about your new book, and and before that, are you reading any books yourself? What kind of books are you reading?
This has been a labor of love. I work on average probably 3-4 hours a day in research and this stuff. But I read a lot. I mean, I'm a voracious reader. I probably read mostly nonfiction. I mean, it's and I read a lot of the journals and things like that.
Sure.
And if people want to get really good knowledge, they got to go to books. You got to be really careful about getting stuff online. I haven't really. No one's asked me that question, but most of the stuff I'm reading is really. I think the last book I wrote was Trillions, about the index fund. How roughly more than 50% of all savings now are index funds, and that's a book I'd recommend people. But that's the whole index fund scam, which is it's about 50% of the. So that's the last book I read on that stuff. So So I'm reading stuff like that. But the two books I'm coming out on, Barry, one is going to be buybacks, cryptos, unicorns and SPACs, which is about how corporations, more than 50% of all trading, Barry, is companies buying back their own stocks. If you took out the buybacks, the returns in the market would only be about 3%. So that one, so I did that, and so that manuscript is done. And then secondly, I'll be releasing Pirates 3, which is about the private equity invasion into the life insurance space, because that's a huge problem. It's huge, and the whole thing is, and and I've been, God's blessed me with some really good experts. Tom Gover up in Pennsylvania, and some other people, Matt Segula and Dave Walker, who wrote the former Comptroller General, and I've had a lot of really good people behind me. But that's going to be exposing the because what's happening now, you're seeing, I call it financial sorcery, Barry. So what they're doing now, we have a life company, I think I know some of the ones you deal with in New York, so those companies they have to be 100% reserved, okay?
Yeah.
But what the private equity companies are doing now, they're domiciling the reserves, they're shifting reserves offshore into Bermuda, or they'll do it through a captive insurer. So they're draining the capital. These companies are very, very shaky. But this has all really grown since the financial crisis. Yeah. So the thing is, really, if they really need someone like you, Barry. So my recommended for your listeners, if they're going to get some life insurance or annuities, get it from a mutual or fraternal. Forget it. Run from everyone else.
Yeah, absolutely.
This is not going to end well.
Yeah, it's not. It's scary, and the concern for me is some of these shady companies that you're talking about, the ones that are kind of teetering. It's going to cross over the whole industry. It's just it puts a bad picture for everyone. So I'm a little definitely concerned about that. But just tell me a little bit, what's your biggest concern when it comes to your legacy, your family, your heirs? What are you concerned about, for the future?
Well, I hope I'm a good powerful example. I mean, because all you can really do is lead by your actions. We can all talk, but I'm a doer. So I think action really is the best thing for any of us in whatever your business or my business. I mean, so obviously I couldn't do this without my faith.
Right.
But really, if people don't speak up about this stuff, I mean, I'll give you a great example. Barry, do you know where we stand in World League tables in terms of retired preparedness in the top 20 industrialized countries in the world? In the top 20, okay.
Probably not so well. Probably in debt. I don't know. Probably not well.
Yeah, we're in the top 20. We're like number 19. We're sandwiched between Hong Kong and I think Guatemala or Nicaragua. One of those. I have it written down, but. So the whole thing is that people, unfortunately, today in America, I think that they're more indebted and they're in worse retirement shape than ever. So they really need people like you to help educate people on this stuff. Because all this stuff, Barry, I'm not making any of this stuff up. But it's hard. You have to go through podcasts and things like that, such as yourself, because you're not going to hear this in the mainstream media. Sure. They don't.
Yeah, you're absolutely right. And, you mentioned that you have to plow through and do research. And I try to just continually educate myself on what's going on. And, just when speaking to people, advise them, you got to have a balance. If you're going to take risks, you definitely need some safety and some certainty in your life for sure. But is there anything you'd like to add in closing? Tell me, how can people reach you? And if
So people go to barrymajamesdyke.com and then get my books, and they actually have a newsletter, and we put them on the list because I'm lousy in communicating this to all people. Actually, I'm hiring my daughter to do this to help me because I just can't keep up with it anymore. So you can sign up for free, and I'll let you know when the stuff comes out. And you can get the books cheap, and we ship them right out of the website. I probably will be having an Amazon, but I'll have it on the next books. But because some of my books, some people are buying my books and they're reselling them on Amazon for like $100 a copy. I can't believe it, but hey, that's capitalism. But nothing if they can get it, they get away with it. That's nothing I can do. But so I think really to educate yourself. I mean, I think people, because it's not just about us; it's about our children and our children's children. And and the thing is that I love this country. I love the U.S. It's a wonderful country. I'm glad I live here. But I think people just need to be more educated about this stuff. And but I guess one of the things which I don't know. Did you ever hear of the Stockholm syndrome, Barry?
Yes. Yes.
Yeah. Well, this is how I feel people are today, and I addressed it in the book. Is that people today are really they're in a 401k or whatever the company may be, index or actual managed. I really don't care. And the fact of the matter is that people do not really look out for their accounts, and then they freeze like deer in the headlights. They don't make any changes. So that's so we're seeing so they're not really doing which is best for them, and the institutions love it because they just want to have the asset management fees. So they really have to educate themselves, and then see what the banks are actually doing. So the banks, all these banks I'm mentioning, or the Federal Reserve, and like a little company called you ever heard of a little company called IBM, Barry?
Yes, absolutely.
Yeah, we know what they did in the fall of 22.
What was that?
They bought $16 billion worth of annuities. Pension plan.
Yeah.
Now this is probably one of the most sophisticated benefits packages in the world. And you know what IBM did on January 1st, 2024, Barry?
What was that?
They put in a cash balance pension plan. They essentially stopped the matches into the 401k and then putting a guaranteed account for their employees. And this is like 254,000 people or something like that. And then IBM is up because they have some IBM engineers who are clients of mine. They have probably one of the best overall benefits packages of any company I've ever looked at. So it's kind of a wellspring moment. But in other words, because I think this whole, people really need people like you to who care and love them.
Yes. Yes. Well, thank you, Barry. Thank you for all you do to inform and educate people, and with your books. Can't wait for your new book. So I'll be looking for that. And I want to really thank you for just joining us today, and thank all of you out there for watching and listening. And we hope you'll subscribe and come back to see us real soon. So thank you again, Barry. And,
thank you, Barry. God
bless. Have a great
you.
day. Thank you. God bless you. Bye-bye.